Are you gonna make it happen today? Or will you just settle for another delay? Come on, you gotta make it happen now. Come on, you gotta make it happen now. Said, are you gonna wait?
So we're back for session number 2. Today we are talking about more federal assistance and more federal aid. And so glad to have Jesse and Eva here from, do you want to introduce yourselves real quick?
Yeah, sure.
Yeah.
I'm Eva from MNP. We work in the Langley and North Van offices, and we service small to medium-sized businesses and help with their year-end work. And now that COVID has happened, we're just doing a lot of consulting and just helping where we can, even with people that aren't our clients, just because we're actually concerned about the risk exposure to come with people filing wrong claims. So that's where we're trying to provide value here, is just kind of highlighting some things that we see that are benefiting businesses, and some of the things that are just like warning signs that we don't want to see people have happen to them when they need the money the most, and then find out later it gets pulled back or they get fines. So yeah, Jesse's kind of become the lead expert. I don't know if it's by choice or
It's kind of fallen into my lap.
Yeah.
Which is nice. I mean, I love helping clients and people, especially in this time, because with these subsidies, again, like Eva says, I mean, you're getting the money up front, but there's going to be audits that happen after the fact, and we want to make sure that everyone's compliant with all the rules.
Yeah, really important, really important. Okay, cool. So let's just dig right in. Today we're going to be talking about the Canada Emergency Wage Subsidy. Jesse, I'm going to leave this in your hands to present. Just a quick note, this is kind of a mini seminar in advance of a larger one where we'll go through the calculation. So don't be freaked out if the calculation looks complex. We're going to dig into that in more detail, but this will give you just a general overview of what's available and how you can take advantage of it, and the way in which you can plug it into your business. So I'll leave it with you, Jesse, and you can just play that and then it'll be full screen.
Yeah, I think I need to actually, 1 second here. Sorry, just technical difficulties here.
In the meantime, I should just while you're working on that, is just say that that apparently there is a lot of calculation work that's involved in this. So I think that's really where the expertise of an accountant really comes in, to make sure that things go smoothly and you don't miss anything, and that it all comes off smoothly. So, all right.
And can you guys see the presentation now?
You can.
Yeah, perfect. All right, so today we're going to go through CEWS, is how we kind of pronounce it at MNP. Essentially, it stands for the Canada Emergency Wage Subsidy. And then we can kind of go through. So a lot of people ask, what is CEWS? So CEWS is a 75% wage subsidy. It's provided by the government for qualifying businesses, and it's actually retroactive to March 15th, 2020. So essentially when the pandemic started. The subsidy aims to prevent further job losses, encourages employers to rehire laid off employees. This just puts them in the position, once we're opening up, to easily resume operations. As we are now, we're kind of easing up, the government's easing the regulations on businesses. The 75% applies on the first $58,700 normally earned by employees, which represents a maximum benefit of $847 per week. So that's the max benefit you can get. So that's actually 75% of $1,128 a week. If an employee is earning that amount, 75% of that is the $847. So that's where the cap comes from the government. As of about a week and a half ago, the subsidy was in place for a 12-week period, which was from March 15th to June 6, 2020. Some exciting news. PM actually announced about a week and a half ago that the extension is going to go to August 29th, 2020, which is good. And we're still getting the full details on that as well. Greg, like yesterday's seminar, I'll send a follow-up email kind of summarizing the changes for the extension.
Okay.
So now, what are the qualifying periods? So about a week and a half ago, these were the qualifying periods, and this is the data we have now. So period 1 covers March 15th to April 11th. What you need to show to qualify for the first period is a 15% revenue reduction. There's two ways you can do this. You can either use a year-over-year method or a average of January and February 2020 method. So the year-over-year, you would compare March 2019 to March 2020. Or if that doesn't work, then you can use an average of January and February 2020. So note, if you choose one method, so if you choose March 2019, the year over year, you have to stick with that method through the whole subsidy periods. So you have to use the same for period 2 and period 3. So period 2 will cover April 12th to May 9th. So then you would have to show a 30% reduction either in April 2020. If you use a year over year, you have to show a 30% reduction from April 2019. If you use the January, February 2020 average, you're gonna have to show a reduction of 30% from that period as well. And then we go to period 3, May 10th to June 6th. Again, the same as period 2, a 30% reduction. You gotta calculate this for May 2020, year over year, May 2019, or the average of January and February 2020. So there comes a question. Once an employer is found eligible for a specific period, so say, for example, we have an employer that's eligible for period 1, they're automatically eligible for period 2. So if they see a 15% reduction in March 2020, they'll automatically be eligible for period 2, and you don't have to do another revenue test for period 2. Where you have to do another revenue test is for period 3, which would be May 2020. And then there's two ways to calculate the revenue decrease. You can either use a cash basis or accrual basis. So cash basis means when money is received, when cash is received, or you can do the accrual basis is when you invoice a client, which I think, Greg, with a lot of your members, it would be cash because it's a point of sale purchase, correct?
It would. Can I just throw a quick question at you?
Yeah.
How do things like gift cards work into this where you're selling something but not providing the service? Like, is there any difference there?
Yeah, so gift cards, I would say if they paid for the gift card up front, we would have to include that in the cash basis.
Gotcha.
Yeah. If you use the accrual basis, then we can use the argument when the client uses that gift card at each specific period.
Yeah, so that was my next question. Is the revenue, are we talking, when you say revenue, is that gross or net? Like, how do you define
Gross revenue. Yeah.
So if someone's cashing their gift card in during this period, are you allowed to use that as an expense against your revenue, like lost revenue at all?
No, if we use cash, we're gonna have to use the upfront purchase that the client did for the gift card. So say if they purchased $100 March 16th,
right,
and we use cash, we're gonna have to include that $100 in our calc.
And you can't do it the other way, where if they got it for Christmas and they're using it on March 16th, you can't use it as a subtraction from the revenue. Is that correct?
We'll just use that amount that they cashed. Say if someone gave a gift in Christmas, they used $20 in March 16th, we'll use $20.
As a subtraction?
As an addition to revenue.
Oh, wow. Okay.
Yeah.
Oh,
Yeah.
all right. Got it.
Yeah.
Fair enough.
So, moving on to the next slide here. What is the eligible remuneration? So this includes salaries, wages, or commissions. It must be paid in the week of the qualifying period. So if I go back one, it has to be paid within these periods here. Again, my next point describes that as well. And the key thing, it must be paid for 14 consecutive days in the qualifying period. So what that means is, say if you are claiming the first period of this wage subsidy, so you're claiming, if you're claiming March 15th to April 11th, your employee has to be working 14 consecutive days within that period for their wage to be eligible for the subsidy. So you can't have someone work 7 days and get laid off. They wouldn't be eligible. You would have to pay them for 14 days.
Okay.
And the big thing is, please know the difference between non-arm's length versus arm's length employees. So arm's length are employees that aren't shareholders of the business, or they're not related to any of the shareholders of the business.
Oh, okay. And by relation, how far can you go? Cousins?
Yeah, I would say cousins. Yeah, if they
Okay.
work for the business, they'll be considered non-arm's length.
Okay.
And then arm's length, sorry, they would be considered non-arm's length. Yeah. So non-arm's length are shareholders and anyone related to the shareholders. So
And
we need to
so
know the difference.
with that, how do you define a relationship? Is that like a direct offspring, like a son or a sister?
Yeah.
Or can you
Yeah.
go one past that, like cousins and uncles?
Yeah, the CRA would deem a cousin or an uncle as a non-arm's length as well.
Gotcha. Okay.
Yeah. This wage subsidy, you cannot do it for dividends, of course, and you can't do it for severance pay.
Right.
Yeah. So the application process is the easy part. The hard part is the actual calculation, which Greg, we had discussed doing a longer session. So you can do this application on your My Business CRA account. If you aren't set up for that, I will send Greg a detailed instruction step-by-step on how to register your business for this My Business account with the CRA. Once you do that, you'll have access to apply for the subsidy. One thing I want to stress, and I stress this to all my clients, is make sure you're set up for direct deposit with the CRA. You get the subsidy refund a lot quicker. And then this is very, very key. Please be sure to keep all calculations and supporting documents saved. We're sure that the CRA are going to audit a lot of these subsidy applications after the pandemic is over. So please keep all your documents you use for the application process saved in a separate folder on your computer or an external hard drive, etc.
That's the usual 7 years? Is that correct?
Yeah, I would do 7 years for this as well. Yeah, for sure. But I think they're going to audit a lot sooner than people think. So keep everything saved. A really good calculator that you can use is actually on the CRA, and I've put a link here. Let's see if I can click on it here. Yeah, it won't actually let me click on it, but this is a really good link. So this actually walks you through the calculation of the actual subsidy. Again, there's a lot of back-end work that clients are going to have to do to get to the numbers to put into the calculator. But this is a really good step-by-step link to follow on how to do it. So I just want to put it in my slide so everyone has it.
Great, thanks.
And then this is a really important slide here. So a lot of common mistakes I find with when a client asks me to review their wage subsidy calculation, I kind of want to highlight a few major points that I find personally when I do my review. So the first one is the government is actually making businesses who qualify for the 10% temporary wage subsidy to claim that first. So what the temporary wage subsidy is you calculate that with your payroll remittance that you send to the government each month. So how that works is you calculate the 10% off each employee's gross wage for that payroll remittance period and deduct their income tax withheld. So your payroll remittance will reduce by that amount.
Okay.
So when you're doing the application for the subsidy, they're going to actually ask you to put in the number you took for the 10%, and you're going to have to put a number in there.
Right.
So really, you receive 65% because it goes 65% for the Qs, then 10% for the temporary wage subsidy. Add those up together, you get the 75% there.
Gotcha. Okay.
Another major item I see is shareholders say, hey, I was on dividends for years and years and years. I want to take advantage of the subsidy. I'm going to put myself on payroll pre-crisis March 1st and start claiming the subsidy on my wage. You cannot do this. CRA is disallowing all shareholders who use this kind of strategy to get themselves on payroll, take advantage of the subsidy. The only way a shareholder can use the subsidy is if they have a history of being on payroll and then paying themselves since the beginning of the year. So that's one major item I see with clients trying to do some creative tax planning,
Yeah.
but it doesn't work.
Nope.
And as we discussed before, the revenue test, if you choose one method, so if you use year over year cash basis, you have to use that for each qualifying period.
Right. Makes sense.
So it's very important to note. And then I mentioned this again. Remember, employees have to work 14 consecutive days in the qualifying period in order to get the subsidy on their wage. So again, if they worked 7 days between the first period, they won't qualify. They'll need to be paid for 14 days. And then this is my last point. The CEWS calculation is tricky, so please, if you are unsure, contact your accountant for assistance.
Yep.
Yeah, so that's
tricky.
all. Yes, it's very comprehensive. So just so you're on the right track, contact your accountant on your file, run it past them. And yeah, it can become a lot for clients. So, so yeah, that's it for my slides. If there's any questions, I can kind of run through those as well.
Yes. So I do have a question here. The question is, does this, if I have chair renters, sorry, just going to paraphrase it a little bit because it's long.
Sure.
If I have chair renters and I am paying EI, do I qualify for this program? Because
and they are paying EI?
Yeah. So in a lot of salons, people who do have chair renters are also paying their EI as well. It's a bit of a hybrid model. So do you know if that qualifies them for this, or is it sort of a gray area that they would have to maybe check with their accountant or CRA with? Or is that something we
can... I think one key thing there is we want to make sure they issue them a T4 slip.
Okay. All right.
Yeah. If they issue them a T4 slip, I have no problem claiming the subsidy on that type of situation.
Got you. Okay, good. Another quick question here was sent in on Instagram is, in what way is this money taxable to me?
Yeah, so this subsidy is actually subject to corporate tax.
Okay.
So for corporate tax, I've had clients ask me how much I keep away till the end of the year to pay. I say 11%. Keep 11% of the subsidy.
Okay.
Yeah.
So it's similar to what we were talking about yesterday, where if we were to take the $40,000, we got to remember that we have to pay that back and all the implications of it, right?
Yeah, for sure. Yeah, the subsidy is corporately taxed. Yeah, for sure. It'll be added to income.
Awesome. Would you, given the amount of work, and if a professional service establishment is, let's say, in a bit of trouble or really has to recover out of this, would you recommend this for your average 2 to 3 person operation?
Yeah, I've had this question come up a lot. So I think clients have to remember, if you want to take advantage of the subsidy, you got to note that you're going to have to rehire employees. I think in the case before we started opening up, I had a lot of clients ask like, hey, I'm going to take the subsidy. I'm going to rehire a few employees. I get 75% of their wage covered. But I'm like, wait, you're still paying the 25%. I think clients kind of need to understand the cash flow and kind of make some tough decisions on whether their business can really pick up after the pandemic is over, right? Because clients are still going to pay that 25%. You're getting the 75%, which is great, but you've got to look out at that 25% that you're still going to have to pay.
Yeah, good point. Are there any restrictions on what those employees should be doing? What if they were, let's say you tried to diversify your business and you started delivering products to clients in a car, and now they were driving around instead of working in the
there's no restrictions on that. Yeah, as long as you're paying them their wage and they were hired pre-crisis, so if they're doing a different role, there's no concerns on that.
If there's a holding company and that holding company owns a business other than, let's say, a salon, spa, barbershop, does it all fall under the holding company, or do they have to go independently with each operation? Do you know, or is it like a whole?
It depends on which operating business has the payroll number.
Gotcha. Okay.
And it's paying the payroll out of. Yeah.
Right.
Yeah.
So it's obviously tied with payroll, T4. Any other connections that should be like, what, I guess in advance of getting this together, what are the top things people need to get together pull together?
Yeah, so what I tell my clients when they're applying for subsidy, for example, period one, is have their calculation together.
Okay.
To have all the reporting, the first period is March 15th, right? So you want to make sure you have all the payroll records from for the first period, because the CRA wants to corroborate your numbers to whatever proof you have of paying your employee. So make sure you have all your payroll records together. That's key for sure, because all your numbers are going to come from your payroll records. So keep that with your calculation.
Gotcha. Are any benefits part of this? Like, for example, health benefits or any other sort of like vacation
No,
pay?
so it's just salaries, wages, and commissions.
Gotcha. So really straightforward.
Yeah, yeah.
All right. Eva, yesterday you talked a little bit about kind of, I suppose you could say the ethics of applying for all of these programs, and that they're really designed for people who really do need them. Do you want to speak a little bit to that in terms of how it connects with the application process? Should you actually apply for this? When do you know you need it?
I think with this one, it's the reason the government put it in is because they'd prefer people be employed and not all these mass layoffs, right? I think that's where like the business decision ethics part, and Jesse kind of spoke to it as well, saying like you still have to pay that 25%, right? So are these people that you're bringing back long term, and are they actually going to generate value to your business? Like I do see people bringing people back, like a small limited number of people, to rejig operations, right? And to get efficiencies and almost invest in their business in the sense that they're doing more marketing, they're doing strategic planning. But if you have a salon and they're just like sitting there, right? Like why are you bringing them back, right? There's a lot of other programs available like EI, right?
Yeah, and you got to look at the CERB as well for them. They're getting the $2,000 a month, right, for your laid off employees. So you got to look at that to add to Eva's point there.
And I think it's becoming trickier for lower waged people, like that just make minimum wage. A lot of them, like what I'm seeing is a lot of them aren't willing to come back, right? Because they're saying I'm getting $2,000 for free, and I can sit at home. Like, no, I don't want to come back, and I don't want to come back at half capacity, right? So I think that is actually going to be the trickier part. So there might be employers that say I can't afford, like maybe their staff member makes $4,000 a month, right? And they really need to keep that person, and they're fine paying the 25% $1,000 just to keep that key employee and not have them laid off and maybe looking for a job elsewhere. So I think it's more strategic business decisions around this and how re-employable your people are to bring them back to you, right? Because there's going to be a lot of people out in the workforce that have gotten laid off that are reevaluating their opportunities, right? And that can be risky for a business owner too. Like say you're ready to open your doors, is everyone actually going to come back to you, right? And I've seen people kind of make the decision more business values aligned, saying I'm willing to pay this extra 25% and float these people because I want them to know that I am guaranteeing their employment and they won't forget this, right? So there's that, and I have some of those conversations. And then in other circumstances, I say, what Jesse kind of alluded to is you also need to protect your business and you're still paying this 25%, right? So 0 is less than 25%, right? Even if you're getting the 75% subsidy, right? So I mean, there's this like heartless kind of approach where you lay off because you really need to cost minimize, and then there's more the like you have a business and you should be values driven, and maybe these are people you want to keep for the long term, right? And you're just gonna eat that cost as a business stability investment, knowing these people are there ready to go when you need them.
Yeah, good, really good point. All right. Yeah. So there's a lot of strategy involved here, in particular in this industry where we're going to see this, maybe a number of operations won't reopen and you've still got the demand out there. So there could be an opportunity for maybe somebody who would like to expand or just maybe they actually want to maintain their base, right?
Mm-hmm.
Yeah, for sure. Yeah.
Mm-hmm.
So if I'm understanding this correctly, can people hire up? Can they bring more bodies in and take advantage of this, or do they only get to go back to what they had before?
No, this works for new hires.
Okay.
There's a different calculation for new hires as well,
Okay.
which I can go through on the next session we do for sure.
All right. Yeah, because we are hearing of operations who are actually aggressively hiring, and they want to take this as a growth opportunity, and they see
Yeah.
they see this as a time to get new market and to maybe fill that space in their shop that was closed before, just because it's a different time, right?
Yeah,
for
and I mean, the bottleneck for growth as a business owner myself, like staffing people, that's always been the most difficult, is finding good people, right?
Yeah.
So it's kind of a funny situation now to be in, right? Where people are quick to let go. Like, you shouldn't forget how valuable your people are, right?
Yeah, very much so, for sure. And when you have good people, that can accelerate your business greatly, right? So,
Mhm.
yeah. Well, wonderful. I just want to thank you both. It sounds big and beastly, so we'll cover the actual calculation at some other point.
Yeah.
Any closing thoughts or anything you want to say just before we wrap it up?
No, I mean, again, this calculation, like you said, Greg, can be very, very tricky. So please contact your accountant if you need any assistance. There's a lot of legislation around these subsidies, so we want to be sure that everyone's in compliant with all the rules.
Yeah, 100%.
Because at the end of the day, the CRA are going to do audits, and then you're going to potentially have to pay it back and get a penalty on top if this is filed incorrectly. So we just want to make sure that everyone's compliant.
Yeah, we love spending time with our accountants, but only for the good stuff, not the audit part, right?
Yeah, for sure. For sure. Yeah.
All right. Well, thank you very much, both you and Eva and Jesse, and we'll see you tomorrow.
Yeah, see you tomorrow.
Yeah.
All right. Thanks.
Awesome.
Take
Thanks.
care.
Bye.
Bye-bye.
Are you gonna make it happen today? Or will you just settle for another delay? Come on, you gotta make it happen now. Come on, you gotta make it happen now. Said, are you gonna wait and sit on your hands? Or will you go and start making out a list of demands? Cause you can make it happen, so choose if it's your passion.